Tim, thank you for having me, and thanks for everybody joining. As Tim said, we've pretty much recently listed, better part of last week, Tuesday, so a bit of a baptism of fire there. But to give indication as to what Hiremii is in short, technology-driven recruitment full-service labour hire. So rather than traditional bricks and mortar, everything is done via machine learning, artificial intelligence, algorithm, automated workflows, and digital workflow. Next slide, please. So, board of directors, significant experience across the board. We're very lucky. Well, I'm most certainly very lucky to be flanked by Alison Gaines as non-executive chair. Over and above that, we've got David Buckingham, who was most recently CEO for iiNet as well as Navitas. One of the founders, Conor O'Brien, and our co-sec is Ilde Kerborowski. Next slide, please. So, probably try and get into the whole juice of the matter here is industry overview now. If you look at the labour hire and recruitment market across Australia on an annualised basis, you're talking about $40 billion worth of spend. Now, in that $40 billion, you've got 9,000 participants or 9,000 operating businesses, of which about 80% of that spend is controlled by pretty much 5 large players on either side of that. Next slide, please. So, highly saturated market, growing enterprises within these 5, and you'll see the rhetoric within a lot of other providers that are very similar in service. You know, they're always mentioning their growth strategy is acquisition or alternatively geographical expansion. In our view, it's probably more a tactical response to the market that they're operating in. Over and above that, based on the fact that you've got these 9,000 participants, clients have got unrestricted availability, low switching costs, if any. Threat in new entrants, we consistently see new entrants enter into the space, which is, and when I say enter into the space, meaning new bricks and mortar businesses. They start off as little boutique firms, and then of course, grow from there. The only real kind of constraint in this space would be low barriers would be the capital requirements, and that is having a factor in wages or pay for wages going forward. From a substitute perspective, everybody's been doing the same thing for the last 20 years within this $40 billion market. Nothing has fundamentally changed. It is alternatively serviced by a black book per se of contacts, or alternatively it's just the spread that they have. Further to this, we're starting to see individuals' requirements change in terms of training, and we're not seeing the market really kind of catch up with that. Next slide, please. So, what does the traditional process look like? If you're looking for an individual, hypothetically, what we're showing here is you've got 3 different paradigms, and all 3 of these paradigms kind of converge into one regardless, so they're tripping over one another. But a company will have a hiring need. At that point in time, they'll go out to either an agency, they'll go to a job board such as Seek or other, or they'll do their own internal search. Regardless of that, all 3 of those paradigms converge into the one flow, whereby they'll share this to the market. At this point in time, the market will respond, and they'll respond with hundreds, if not thousands, of resumes. And what you might find in that is the company's looking for an engineer. What they get back in terms of profiles or in terms of resumes is 1,000 applications. There's about 100 airline pilots that are looking for a new occupation. There's a significant amount of noise within that batch, and therefore they've got to kind of match that or shortlist that. And our traditional bricks and mortar business, how they'll do that is you've got essentially a boiler room full of people that'll kind of churn through this manually and then present a shortlist to the client. After that, clients then got to go back and verify whether the candidate is who they say they are, whether they have the skills that they say they do have. And of course, the process goes on and on and on. And by the time you've actually engaged an employee to start with your business, either as a full-time equivalent or as a contractor, you're looking at 40 to 68 days. Now, what's important to call out in the 40 to 68 days is you've got 3 different paradigms of cost as the company trying to hire. So you've got agency costs, you've got job board costs, you've got your own internal administration across this. I mean, the waste of time itself doesn't just drive the cost up, but most certainly delays your own access to revenue. So if we go into the next slide there, please. So when we started the business, we started it under the on-contractor banner. We took a very simple strategic approach to this, and the strategy itself was a competitor-based strategy, but rather than view our competitors as the external index that we were up against, we actually viewed ourselves as that. So we took a traditional, fundamentally driven labor hire and recruitment business, set a price ceiling, and the only way we knew we could achieve that was in essence to invest in technology rather than invest in buildings and invest in additional people. Next step, which is going to rise from our listing last week, is essentially now taking that simple strategy, continuing down a very simple paradigm once again, and then just focusing on customer and technology. So we've got a price point, and it's a price that we don't really see anybody else competing at this stage, and investing further in technology. So therefore, building out our AI and machine learning, shortening the user journeys and user interface, but most certainly creating a barrier to entry. And we can see that in the rhetoric that the market has presented over the last, call it 16 months or 18 months since COVID, and that is they have to invest in tech, they've got to do things differently, but we've been on this journey for the better part of 3.5 years already. Further to that, we'll invest into the delivery of a SaaS model. Our SaaS model will be considerably different to what a traditional SaaS model is going to be. If I go back to the $40 billion market, in that $40 billion, there's only about $550 million worth of SaaS spend. So our SaaS model will be a hybrid, and the hybrid will then contain labor hire and recruitment, and provide us additional access to that large market. Next slide, please. So what I might do is I'll actually ask for the video to be played, and then I'll kind of jump back in.
Finding the right candidates for skilled roles can be a lottery. Take away the guesswork with Hiremii, your digital alternative to traditional recruitment. Our AI matching and screening technology does the heavy lifting, reviewing all candidates automatically so you can focus on the people. And we only match candidates with the right blend of skills, experience and qualifications to your vacancy, whatever your industry, sector or location. Getting started is easy. Simply sign up online at hiremii.com and post your vacancy for free. Hiremii matches top candidates, confirms qualifications and tickets, creates your shortlist and sets up introductions. All documentation, including offers, is managed safely and securely online, so you can stay clear of the paperwork and processing. With no upfront costs, low fixed fees, and nothing to pay until we place a candidate, you'll be saving thousands of dollars and fast-tracking the search for your next star performer. Interested? Sign up today at hiremii.com and post your vacancies for free straight away.
Thank you. So as a comparison, the product that we run, essentially, if you look at previous process flow, in essence, the client signs up, they fill in a digital scope. The scope is pretty intuitive and responsive, so it takes a user on a very short journey, but also starts to pre-populate on the user's behalf after a period of time based on the user's preferences. But also, a lot of companies tend to have very similar scopes over and over and over. The scope is then matched to an internal database of candidates or profiles that we have, and it is matched by a machine learning and AI algorithm. We're also enhancing that as we're deploying enhancement on semantic matching as we speak. So rather than have the 1,000-odd applications or the 1,000 applications presented in a shortlist that is paper-based, you're presented with a shortlist of profiles very, very quickly in comparison to what the market traditionally does. And from there, you're going through into the interview process. So if you go to the next slide for us, please. So what I might do is I'm actually going to skip over this one and I'll go into the last slide, but the client's got an opportunity to make a decision. The decision is whether they take an employee on full-time or whether they go for a labour hire engagement. Now, if you look at the previous paradigm, sorry, just back a slide there. So if you look at a previous paradigm, you're talking 40 to 68 days worth of administrative burden. across, call it, 2 organizations, as well as the job boards that they use. Now, we don't have that. We've got 1 location throughout Australia, and that is cloud-based, which is and serviced by 10 employees, 5 of which are market-facing. So therefore, the digital technology makes it very simple for the client to use. The process is transparent, so both candidate and client know exactly where they are at any point in time, but also economical. So if I draw a comparison to what the market traditionally charges, on an average $100,000 per annum full-time wage, you're looking at anything between 15 to 25%. We charge traditionally $4,500 fixed fee for every candidate placed, and therefore we've seen some reasonable market penetration. From a labour hire rate perspective, our clients aren't paying for any of the overheads that come with a traditional business, being buildings, people that sit within those buildings, and other corporate services. So next slide, please. So performance from FY18 to last year, I mean, we're in our infancy for all intents and purposes. We commenced, or we started to commercialize the offering in May 2018 to be exact. And your first year as a technology company, it's just under the $80,000. Not much to write home about, but we knew that we were onto something, and we believed in the product. So did a $375,000 raise, and from there went and engaged the market even further. So FY19 completed that just shy of $900,000 in revenue, but also started to increase our client footprint. And of course, at that point in time, we raised an additional $900,000, which would enable us to really kind of service larger and tier 1 clients. And we can see that within our register and within our prospectus. We've mentioned that we've got a national master service with PwC as well, UGL. And we'll continue to build those partnerships out with other clients. But FY20 completed that just under the $6.2 million. So substantial growth over a short period of time. Reason being is, and by design, not by default, we didn't focus on the SaaS model at first. We actually focused on the $40 billion piece of the pie, which is the labour hire and recruitment piece. And if you look at the labour hire deployments on the right-hand side, I mean, that started with 2 and has grown to about 110. So the accretive revenue is very quick. Next slide, please. So revenue to enterprise value of listing was, well, market cap listing was about 14. Enterprise value at that point was just shy of $8 million, but our half yearlies are sitting at 3.5. Nothing's fundamentally changed from that. So we're still continuing to see our trajectory in the right direction. Bearing in mind, as I said prior to this, we need to really kind of look at the market that we're operating in. Most of our peers have raised tens of millions of dollars to date. It's taken them between 10 and 20 years to get to half the number that we have. Our capital costs are considerably low in this space, bearing in mind our cap raises have only been 375, another 900, and then a 2.4, 2.5 pre-IPO, and of course the IPO. So the business has never been in a better position. No debt. We're well funded now and poised for growth. So exciting times ahead for us. Next slide, please. So from a highlights perspective, I mean, the team itself, the board, have got access to market. They understand the space. They also understand the client's requirements and effectively have done similar things before. Technology, very simple tech. We've not spent money hand over fist on building a product that nobody understands. We've taken what is just an issue in the way services are delivered, and they have been delivered for a very long time, and enhanced that. The machine learning and AI, you can see within the market, it is most certainly topical, but it's most certainly empowering. We can see additional growth and additional utility being provided to our clients pretty soon, and we're continuing to enhance this. So, yeah, the market itself, I mean, from a client footprint perspective, our market share has grown considerably. I mean, we've called out the PwC and UGL master service agreements, but we've also grown our footprint from 6 to 31 clients in a very short period of time. Albeit we don't service all those clients, but bearing in mind, up until recently, we've only had 10 employees, 3 of which are dev, a CEO, CFO, and of course, 5 that are market facing. So $620,000 per employee per annum is not a bad space. From revenue perspective, I've gone through that. The trajectory has been fantastic. Yes, this year we've continued to grow, probably not the same trajectory, but considering we've had COVID and a focus on the IPO has diminished our focus on client. But now that that's complete, we'll get back to business. And scalable. Now, for anybody else to scale in this space, they've got to look for another building. They've got to fill that building. It takes some time. We sit in WA in Perth, and we don't have not one contractor that actually works out of WA. All of our contractors are sitting on the Eastern Seaboard. Our clients, we service them on the Eastern Seaboard. Technology enabled. We don't need to, for us to go into any other sector or any other space or geographic location, it's a case of just engaging with the client.
Chris, that's all we have time for. I'm sorry. I've got one quick question for you. You've got some concentrated clients. How will you diversify your revenues?
So I called it out a little bit earlier there. We've grown from 6 to 31. The reason that the concentration looks as high as what it does is because, well, we've been servicing 2 master service agreements and servicing them well. The funding that's been provided by the listing on the ASX has given us the ability to actually start servicing additional clients and growing that revenue base. So most certainly not, we don't see that as a risk whatsoever. We just see that as pure opportunity, something that we've not even started to touch.